Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon free webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment brokers or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Dimitri Pargamonic to the stage. We'll be talking about the call options screener. How you doing this morning, D?
Hey, Will, how are you?
Good. Let me share your screen. There we go. All right, there's Market Chameleon landing page, ready to go.
Yep. And what we'll do is navigate to the call option screener and look at how to use some of the filters to narrow down the candidates. And it's really this is in reply to a question that came over from a customer to show what some of these filters can do. So let's go to the main menu up top, screeners, and we're going to navigate to long calls. I'm going to click on that. This will take us to the long call spread screener. And up top, we have our filters, and then below we have our data elements. So the question was what some of these filters can do for us. From the top, right now, if you are looking to screen for call options, but you look for particular groups of stocks that you're interested in, and that's the stocks that you want to concentrate on. If you create a watch list, you give that watch list a name. If you drop it down from here, you just select the name you gave it after you saved it in your watch list, and that will filter out opportunities in only those symbols that you have saved. The next one is the expiration. And when we screen for options, we could screen for particular expirations, because we have options that have different short-term expirations, long-term expirations. So you could choose the expiration, you could drop this down, or you could also, and it's defaulted to the next monthly, or you could also pick a range of expirations. For example, if you're looking for expirations that expire in the next 30 days, the next 14 days, 7 days, or you want to go beyond that, like 30 to 60 days, 60 to 120, above 180. So if you select that, this will look for option contracts that expire more than 180 days away. So by clicking on that, you see over here, we have options that are going out, until August, and so on. So these will give us, the longer term options. But I'm going to go back to, let's just stick within the next 14 days. So another filter we have is moneyness. And this filter just looks for stocks. And there are two filters really for moneyness. One is, this one, the moneyness one is by delta. So you could choose by the option delta. Or this one just kind of gives you, all the ranges. So if you say, in the money stocks, where the stock price in this situation is higher than the strike price. So that would be in the money. So it'll give you all the in the money. Out of the money is where the stock price is below the stock strike price. So in the call, if a strike price is above, it's out of the money. And at the money, we just defined it as anything that's between 0 and 50 cents. So that's just kind of based on strike price and stock price. So if you do that, this will return only options, with the strike price that is within 50 cents of the stock price. Okay, so here in NVIDIA, Apple, so 0 to 50 cents. So it's basically it has to be very close. You could use deltas if you wanted to use deltas below or above. You could do that here. But there are two ways to do the moneyness. And this allows you to screen for options. If you're looking for particular options and you only want close to at the money, this will filter out the other ones. If you want options that are, let's say, out of the money, or the ones that are wings or tails, you could screen by that as well. So that's what the moneyness does in the option delta. So I'm going to go back to any. So the bid-ask spread looks at, I'm going to come down here, and if we go to market data, so this is for the call, this is the stock symbol, stock price, price change. This is the expiration, the strike, and this is the bid and offer in the call. So you can see here $1.73 bid, $1.74 ask. So that means that the market itself is a penny wide between the best displayed bid, best displayed offer. And this lets you look for that bid-ask spread. So the bid-ask spread is the difference between the bid and the offer. So sometimes you'll have, here's 10 cents wide, $9.25, $9.35. This is 10 cents wide. This is 5 cents wide. And this just lets you know basically the spread between the bid and an offer. If you wanted to look for options with smaller spreads or higher spreads, maybe, then you could use these filters to narrow down. So let's say anything that's under 5 cents. So this will take us down, and now we see options only that have a bid-ask spread less than 5 cents. Okay, I'm gonna unfilter that. So sometimes, let's come back to the summary, and here we see this is the stock price, market cap, and when we look at the analyzing this is the option over here, this expiration and strike, the delta, and here is the ask price, because we're looking at a long call option screener, and if you're buying an option, the best available price displayed is the ask. You could try to negotiate or put something below that, but since we're looking at it from the long side, we're analyzing the best available price displayed that you could buy at. Now, sometimes traders look for options, but they're not interested in options that are either very expensive, like this $11 option or $5 option, or they're looking for options that are more expensive, like they might not be interested in a 50-cent option or 69-cent option. So this option price just lets you filter out by those types of parameters. So let's just say we are not interested in higher price stocks, and I mean higher priced options, and we're only looking for options that are under $1. So by clicking this, so now we have options that the ask price is under $1. Okay, so these are the options: option expiration, strike, what's the symbol, and this is the ask price, 54 cents, 69 cents, 63, and that allows us to screen by the option price. I'm gonna unfilter that. What about IV changes? And as traders, we may want to look for a particular market movements in an option, and that's the implied volatility. So if we come over here, let me see here, I think it's in market data. So if we go back to market data, here's the implied volatility of the option, and this is the change from the previous day's close. Okay, so it's close, just like a stock price. And maybe as a trader, you're looking for options that might have momentum to the upside, increasing. So you might want to look for options where the implied volatility is increasing, by 5%, 10%, any positive. Let's say we do 10%. So now we're looking at these options that have an implied volatility increase, by more than 10%, implying the demand for premium. We could go the other way. These are the IV ranks, so we know the option increase, and here's the current implied volatility rank for that option. So we could go the other way, and maybe we're looking for options that aren't necessarily momentum, and there's a demand right now for the premium, but maybe sometimes we're looking for a deal where options are getting sold, implied volatilities are lower, and maybe that's an opportunity to step in, into market weakness. So that we could change those parameters and show me implied vols that are down on the day. So I go to minus 10%. So now you can see here, these are options where the implied volatility is down by more than 10% on the day. So let's unfilter that and go back to our original summary page. We talked about the option delta. So of course, if you're just looking for option delta, let's say you want a delta, if you're looking for maybe an out of the money call, you could say a delta below 20. So this will look at, the deltas below 20. So these are out of the money calls. You can look for in the money, out the money, but this gives you a ability to screen by delta. And then we have this IV lean, option IV lean. And it's a parameter we created. It'll show up here. And what this is looking for is where the market looks like it's tightening up or leaning in a way that is either towards the bid side or offer side. So when we think about markets, they could be competitive. We could have a market maker that creates a market that, willing to buy an option for $1, sell it at $1.20. But let's say you have someone interested in the option, wants to improve the market to entice the other side. So let's say you went from $1 and then you increased and said, well, I'm willing to pay $1.05 or $1.10. So what you're doing is, what's happening is the market is starting to lean closer to the offer on the bid side, right? They're starting to raise. Somebody could put in a limit order or pump into implied volatility, where it's streaming with the stock. But what this does is create a lean on one side where they're indicating interest. The buyer's indicating interest, or a seller's indicating interest, that maybe not go and sweep the offer or hit the bid, but they're saying that they're willing to improve the market if there's anybody interested out there. So that would be an IV lean. And here we have a bid, ask, or it could be on both sides. So bid lean would look like this, where in this market, it looks like the market tightened up on the bid side. Okay, so we'll go through that analysis, look at surrounding surrounding data, where the markets were before and after, the implied volatilities, and we detect a bid lean, we have that indicator. Or you could look at an ask lean. This is where the market tightened up on the offer side, where the offer became more competitive. Okay, so that's an ask lean indicator. There's this that a seller was showing up and willing to offer or indicate that they're a seller for anyone out there. So that could go both ways. A bid lean, someone could look at it. Let's say we're just looking at it from a long call option screener. Well, bid lean can indicate to a party where, well, not only am I interested in buying, but there's other buyers there too. It's kind of like a reinforcement, right? That there's already a bid lean there, a buyer who's competing, and that's kind of an indication going the same way. Or you could be looking for an ask lean where, again, you're stepping into weakness, where somebody who's trying to sell an option, and is maybe pushing down the market, gives you an opportunity to negotiate a better price. Okay, so that's an ask lean. Now where both sides come in, the bid and offer from the previous quotes came in, is telling you that there is interest on both sides, that there's competitiveness and interest in both sides, that they leaned into the market. So that would be the IB lean. So Will, I'm gonna stop there, and we could continue on the other ones because they are more in depth. But I think the question was on these first sets of filters.
Yeah, that was a great webinar, D. Thanks for bringing this to Chameleon community. Hope the individual asked a question gets to watch this show. If not, we'll try to send it to him. You have a great day, my friend, and we will see you on Monday.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day. Have a great weekend. Hope to see you Monday.
All right, we'll see you on Monday, D. Have a great day. Bye. Hey, everyone. Thanks for joining another Market Chameleon webinar. Everyone have a great, safe trading day. And remember to like and follow us on all the social platforms. Wow, my face is going in and out of fuzzy. That's strange. But have a great day, safe weekend, and we'll see you on Monday. Thanks, everyone. Have a great trading day. Bye.